Hello, trading has closed on January 29th, 2025. We'll go over my trading plan for Thursday, January 30th, 2025. Please do read my disclaimer first. We'll look for the pattern today with the early high. That's this. Tomorrow should also have the early high. Look how this old FOMC announcement price from way back last year still has significance. This is the FOMC announcement price from today, 60.35.33. This is what we said. We said the rally stopped at resistance. We thought that even though indicators are from sentiment show we're near a significant low, that in spite of yesterday's rally, there was a chance of a drop today. So we should drop pretty much right from the open. That's what happened. Well, during the day, we got an ultimate buy signal with lower targets as well. They've all played out. The system called the moves as false when they happened, and they've already retraced. Well, today's close was 6,039.31. I had computer problems, and I have to redo a lot of stuff I did earlier. That's one of them. All right, so we gapped down, hit a lower low, closed over all the lows. It's a positive pattern unless we gap and take these lows out early. That's always possible because the first move after the FOMC announcement was down, and usually that tells you where you're going to go for the next big move. But first you typically get a whipsaw where you go down, go up by a higher amount, and then down by the largest amount of all. So we have two of those legs, but not the third. So all those things are arguing for a gap down, but certainly if we gapped up instead, which is always possible, you have to realize that that whipsaw doesn't work every time. It's just what usually happens. We think we're in the fourth wave, magenta 4. We have to find out when it ends. We have to find a way to count today's action. Well, we had green C ending here, but this could be an ABC. And if it ends here, and that's wave 1, C is 38, wave 1. Wave A, C is 38.2% of wave A. So if we stop here and go up, you could count that as the end of green C. I'd be much, much happier if we hit my original target of 58.64 with all these great fibs. But that doesn't mean it's the only way to count things. You have to use the mixed signals rules. Thursday's pattern has an early high regardless of where we open. Today showed neither the rally into the close nor a straight line drop. Tomorrow's open, substituting for today's close, should rectify that deficiency by gapping sharply. Now it is bullish. We gapped down, hit a lower low, but closed over intraday lows, and if we gap and promptly undercut today's low, that kills that positive pattern. It hasn't happened yet. It's bearish. The first move after FOMC was down. We've only completed 2 of the usual 3 legs of the whipsaw, and the third leg usually undercuts the announcement price by more than the amount we traded over it. Sentiment indicators imply we're near a low in terms of time. So if we gap down, hit the 58.64 target, give or take, near Woodson's turn date, give or take, of January 31, should make a good buying opportunity. But if we gap up and rally instead, the wave count is far less pretty, but it breaks no rules. I have to consider going along for the ride higher. In any event, it shouldn't be too long until we rally. The only question is if we drop down, hit lower prices first. I'd like it if we did, but I can't say it's guaranteed. And if we gap up and start going up instead, I may have to believe it. It's a lot clearer for me if we go down first, but it's not the only way to count this. It's a pattern with the early high. The open should be a gap, and if we gap down, we have a clear target with a clear entry. If we gap up, the entry is far less clear to me. And that's today's call.